Welcome back, everybody. It's currently Sunday, 18th of July, currently 4 p.m. Central European Time. As usual, we're going to do our weekly recap of last week. Last week, as we know, was from the 12th to the 16th of July, and we had some interesting reports and speeches during the week. So on Tuesday, Monday, no big deals. We had some comments from Fed Williams, but all the eyes of all investors and also from the central banks were on the CPI index, so the CPI of Tuesday. The in-customer inflation data was coming out. Was already expected higher than previous. In the month-over-month was expected lower. But this data will have been very, very important. On Wednesday, we had the first of the two testimonies of the Fed Chair Powell. We also had the beige book, which I will show you. And Thursday, the testify. And on Friday, the retail sales. Of course, also jobless claims as per weekly flow. So let's start the week on Monday. So 12th of July, this was done pre-London as always. We are coming out from a big order block created between the 1795 and 1820, mostly 1812.5 key levels, and we were expecting we were in a bullish trend, and we were waiting for a risk buys with a bounce from 1803 to continue up, or a risk reward sells below 1803. Let me check also. Perfect. Okay. So we're mainly focusing on the 1803 key level. Let's see how it plays out. This is the daily structure. So we're in a higher time frame, bearish trend, but since last week, from the bounce, the double bottom that we spotted last week, we were in a bullish trend as per fundamental reasons that we gave last week, over the inflation, over the job unemployment rate high, and still no tapering, no tapering, and no interest rate hikes. So let's see. Let's go on the 15 minutes time frame, and we start seeing Monday. This is Monday, starting with the Asian session. So as you can see, let me put it 1803. Okay, it is 1803, and this is the key level we are watching, and I will want to see the reactions through the day. So we saw price going below, retest, break and retest, and then continuing for like 30 something pips, and then bounce off the big support that you see. Got many rejections during the last few days, and bouncing off. Creates a sort of double bottom, and now with the I think now we are in the New York Stock Exchange session. We have some volume in the last hour, and we see New York Stock Exchange. We see a big liquidity grab below 1972, and a bounce correction, immediately correction on the upside above 1803. Okay, not much is happening after that. So as a recap, was not easy, but we could have some counter trend scalps, as you see, of like 30 pips. Safer sells below 1795 were not that easy. 1795 was intermediate, was yes 30 pips away, almost impossible to enter. And of course buys from 1803, but nothing happened, nothing special. So we jump to the Tuesday, which is the day of where is expected the testimony of Powell, and we see our analysis was we are starting to see confirming some extortion from buyers at the upside, failing to make new highs. We had this huge equity grab and price continue up. What are we looking for now is okay, dollar is in a bearish trend, still creating new lower highs and new lower lows. We want to see a break of 92 flat to see continued action, but we need to see the lower CPI data from today. That's it. So we are still playing the games with the key levels. So we want to see now during London session a bounce and a retest of 1803 to price continue up. So high risk buys at 1803. If we see a double bottom created at 1795, you see where all the support has been created, and then price continue up, we can have some interesting buys, high risk, high reward, of course. But if we see straight up action, bullish action, we can try to spot reaction and rejection at these previous highs with failure to make new highs. So let's see how it goes Tuesday. Okay. Okay. We are in a range. Okay. Let's go back a couple candles. Huge dildo candle. What do we see? We have the CPI data. 0.9 higher than previous, 0.9 higher than previous. So this is just a few of the inflation data reports, but the inflation is definitely higher than expected, higher than previous. And we know that in a way, both gold and the dollar are used as safe havens, or gold as a precious metal to counter the inflation of an economy. So on gold, this should give a huge bullish impulse. Is a bullish fundamental. So now we see during the right after the news, we see liquidity grab, as you can see, 1803 respected, then up like 140 pips to play. But then what do we see? We see ranging, because we see an immediate correction of that movement, showing us that the also gold in fact spiked up. Why? Gold, with its role as a safe haven, has a role in the market to counter the risky currencies like euro, Great Britain pound. They are sold to buy dollar when this report come out like this. But we saw a spike exactly on 1803 key level for like 130 pips. of profit in a few minutes, then immediate correction. Okay, then we have some volatility, but then towards the end of the day we see price dying out. So we go on the next daily candle, which is Wednesday, the day that everybody is expecting for and waiting for, since we have the testimony of Powell. So last high, last higher low. What we want to see? We want to see if the bullish structure is respected, because as per now, yes, it's creating higher lows, higher highs, failing to break a new higher high. But still, since it is another block, still we can see that we are in a bullish trend. Okay, this is what I already expected. So we spotted that 1806 has been a nice area all through the weeks. We see how it acted as a resistance, and then a support. So we want to see if we have a bounce from this area to continue up, or a further pullback to 1803 to continue up. Then still there are no confirms to sell gold. Today we have the testimony, of course, addressing the COVID, unemployment, CPI, taper, interest rates, etc., etc. Okay. So remember, we wanted to see if we had either a straight up from these lows was done. This was done the pre-Asian, actually, spotting these 1806, 1807 to continue up. So you can see here we have already a bounce. We see some action, a double bottom created, and then already a bounce from this support. Let's see if it makes new highs. Okay, it's indeed breaking. We see price is in a bullish trend. It's playing around the key level, failing to break below, making new lows, new higher lows and higher highs, and then an impulsive buys after above 1812. Here, buys a bounce off 1803, 1806, and of course it buys above 1812. Be mindful always that the price is not able to break above, as you can see, is higher risk, higher reward sells. If price reaches these levels without necessary confirms, and it gets rejected. So now it's breaking above this level, above all the previous highs. So it got that juice. Goes to 1830 key level. That's it. 1828. And then it gets rejected since it doesn't have the enough confirm yet to continue up. Then we have a bounce. Then we have the testimony of Powell, which is now we will see doesn't bring much volatility. As you can see, safe buys above 1818 were called, played out for 120 pips. As you can see, we spotted the 1812 and also the bounce of the data of 1806 as expected. So the testimony wrote inflation data is consistent with what expected, but also might have been higher than expected. If Fed sees inflation remain materially higher for a period of time, Fed will change the policy, will use its tools. Fed is aware that inflation is high. I think we'll be able to get back to 3.5 unemployment. It will take many months, they say. If you continue to make a profit, we'll see US begin to taper. If it continues to make profit, the world's gold will begin to taper. Okay, so there's a mix of optimism, but unemployment has to get at a lower level. The inflation is high, is definitely high, and is too high. So that's why we see bullish trend on gold. As you can see, the beige book came out. The U.S. economy strengthened, moderate to robust growth, above average growth included transportation, travel and tourism, manufacturing. Supply side disruption became more widespread, including shortages of materials and labor, delivery delays, and low inventories of many consumer goods. This is what is bringing up the inflation as per the Fed. Non-auto retail sales grew, bank lending activity increased, the outlook for demand improved further, but many contacts expressed uncertainty of the easing of supply constraints. Employment, which is very important, slight or modest job gains. High healthy labor demand was broad-based, but was in the strongest for low-skilled position. We have a moderate pace of increasing wages. Labor shortages were often cited as a reason firms could not staff at the desired level. So there's a high supply and low demand of jobs. Higher than average turnover and low retention rate were reported in 3 districts. Prices increased, of course. Construction costs remain high. Lumber is a bit. We know how increased a lot the price of lumber during the last month. Container prices, blah, 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 blah. So we go now on the, okay, you see how it played out. This is the day. It played out the bounce off that we were expecting pre-Asian and the rest that we saw already. As you can see, pre-London, we were calling the 1812.5 and 1818 buys. Really cool. Let's go on the 15th of July, so pre-Asian. So down from the night before. We're expecting a pullback. Since we are making new highs, we're expecting a pullback to then continue up or below this level to have safe sells. After London, we saw that we were able to make new highs after a pullback to this level, 1824, which was not cold, of course, but we spotted already a few pips, like 40 pips high, and now we're expecting a pullback to continue up. 1836 to break it would be huge, where we're also expecting now some counter trend sells. So let's see how it plays out on Thursday. So this is Asian. As you can see, it's going at 1824. And then as the strength to go up. Doesn't actually make it to 1836, but we see that there are not enough buyers anymore in the market, and we see profit taking. And then we see some ranging, still order block created, break below, bounce off 1820 to then continue up. Now the day is over, as you can see. Buys above 1830, 1828 played out, and the bounce of 1820 played out. You see bounce off No, not even. This was, I think, pre-Asian, of course. So it was not the cleanest action, but it was indeed a call. And now we go on the last day, which is Friday. There's still no reason to shift in a bearish bias. Even though Powell's speech is kept a pretty neutral point, it is undoubtable that inflation is high and will stay high for some period of time, and the Fed is not going to do anything about it until really necessary. Today's retail sales will confirm or not they grew at a moderate pace set in the beige book. We want to see price around these key levels. So if we see strength above 1830-ish to continue up, or if we see again a bounce of 1824 or deeper 1820. Safe sells only below 1820. Okay. So we are seeing failing to make new high again. Okay. Let me put the news up. Okay. Okay, as you can see, we had better retail sales in all the categories, which means that the US economy is spending, and the higher inflation is not affecting that bad the US economy. So we are seeing a liquidity grab, and then the price should continue down. Exactly, we see a typical Friday night, Friday afternoon profit taking of the investors. Below 1820, as you can see, strong closures below, and then like 80, 100 pips of sells as a pair.